If you invest in real estate in Berlin, this conversation is becoming critically important right now. And before we start, subscribe and write in the comments, are you more inclined to buy or wait right now? This will help understand how the market thinks. In 2026, Berlin remains a strong city. High demand, limited supply, consistently high rents. But behind this stability lies a fundamental change, and it is not related to real estate. It is related to the economy. Artificial intelligence is now changing not only the labor market, it is changing the structure of incomes, businesses, and entire industries. What this means: some professions are disappearing, some are simplifying, incomes are becoming less predictable, career trajectories are breaking, and most importantly, the middle class is losing stability. And it is the middle class that is the foundation of the real estate market. And here arises a key point. A mortgage is not just a loan. It is a financial product that works only under one condition: predictable income for decades ahead. If this condition disappears, the very logic of the market changes. This does not mean that people will stop living in apartments. It means that fewer people will be able to buy, more people will be cautious, investment decisions will become stricter. For Berlin, this means the following: the market will not disappear, but it will become more selective. The gap between properties will grow. Strong properties, good micro-location, clear ownership structure, reasonable utility costs, stable rent, liquidity. Weak properties, overpriced, high risk of repairs, poor energy efficiency, weak location, complicated rental agreements. And it is the weak properties that will be the first to lose value. Now about the strategy. I do not share the opinion that real estate ceases to be an investment, but I completely agree that it ceases to be a simple investment. In 2026, investors must act more precisely. My practical strategy looks like this: buy only at a discount, preferably leased properties with a clear cash flow, and plan the exit in advance. The key point is not the rental. The key point is the moment of vacating the apartment. When the tenant moves out, a light renovation is done, the property is brought to market condition, it is sold at the right moment, and the cycle repeats. This is no longer passive income, this is a managed investment. For those who do not want or cannot engage in this, I consider it reasonable to consider selling right now, while the market remains liquid. And one more important point. Many ask the question, where to invest then? But if we look honestly, stocks are volatile, crypto is unpredictable, bonds depend on rates, gold does not generate income. Against this backdrop, real estate in the center of a big city remains one of the most resilient assets. But now it is an asset that requires discipline. And the main question for the investor in 2026 is, am I buying real estate or am I buying risk disguised as real estate? Write in the comments how you currently see the market in Berlin. It is very interesting which way the majority leans.